In this video, I've put together a list of things that I think really grind my gears about the investing industry, the investing business, whatever you want to call it. And I've put them all together now, just kind of get them off my chest. I think I'll probably feel better after I do that. And I'm sure also that you'll enjoy some of the things that I'm mentioning as well. I got the inspiration from another video I saw on YouTube who were doing a similar thing in their industry. And I thought I really enjoyed it. And I was like, you know what? The investing world and this kind of whole financial industry is an absolute mess. So let's dive into some of the things which I think are a complete mess and need to change. First up, all of those penny stock pumpers and influencers and day traders who are all completely dishonest, absolute moral scumbags, either on YouTube or other different platforms, all these on the social media platforms, who will convince you that you can easily become a day trader, make millions, bro, just invest in this and buy their courses. And unfortunately, many people get trapped in this. Many people give all their money across. And many of these people are brand new investors. And unfortunately, they just get trapped. I think some of the worst ones for me are the ones who will actively pump penny stocks, get paid, and they will also disclaim that. They're in the description, it will say in very small print, you know, so-and-so was paid $13,000 to pump this stock, basically. And I still don't think that's okay. At the end of the day, not every single person is going to read that disclaimer, realize that they're being taken for a ride. And the only reason companies advertise on their channels is because people do buy those penny stocks. They see a chart going up very quickly and they can have huge volatile price swings in a day. But really, why do you think they're being paid? They're being paid because you, as a retail investor who goes and buys these things, ends up being the exit liquidity for these directors who are trying to sell their shares of their little penny stock. It's absolutely crazy. I think generally this probably happens a lot more in the US than it does in the UK. I think touch wood, the UK isn't as bad as this, but I think it's absolutely scandalous. And the fact that all of these people will claim to have all of their income and all these flashy things from trading or doing FX or whatever else they do. And really, all of their income is coming from a course that will do it for you. The worst thing is some of them are like 19, 20 years old. So what, all of these, 2 years worth of experience at best when they opened their first trading account when they were 18 during the pandemic? It's crazy. It really is the Wild West out there. And I don't really have the solution, but absolute clowns, scumbags. The next one, generally the kind of financial media, kind of whether that's in print media or on video, I think is absolutely scandalous. And I kind of feel sorry for some of the journalists who are told every single day, right, Johnny, you've got to come up with an article today. Come on, it's 9:30. You better get your article out every single day. And all those things you see, they're just absolutely junk. The worst ones for me are the ones saying like, oh, if you had just put £10,000 or $10,000 into this stock 10 years ago, here's what it'd be today. And you're like, oh, I better click on that article to find out, oh, if I put my money in Nvidia, I'd be rich today, would I? Great hindsight investing. Or the other ones, which are really bad, again, targeting people who don't really know anything about investing and trying to create this idea of some kind of magic passive income, would be stuff like, here's how I would create a passive income of £1,000 a month by buying this certain, FTSE 100 UK stock. And the article will go into like a high yielding dividend stock in the UK market. And we'll suddenly go back and say, right, if I just extrapolate their current dividend yield of 8.5% and assume I get growth of 3% every single year for the next 40 years, you'll end up with £1 million and you'll be able to pay yourself £5,000 a month. Hurrah. It's mad. It's absolute nonsense. That's not how investing works. But every single day, these articles are made. I don't know who's clicking on them. But some people must be because they're getting adverts put on them. But anyway, it's such nonsense. And then videos from all the different kind of news stations covering financial stuff. It's just either, a crazy bull case or a crazy bear case. The world's going to end and everyone just buy gold. It's so much noise. It's so much crap. Don't know how people put up with it. Anyway, really grinds my gears. The next one, financial advisors, mostly, okay? Before people start coming at me, I think generally in the UK as well, they're probably better. And maybe I'm having a go here at the US market because I think it's a lot more ruthless out there. But effectively, what kind of industry allows people to basically just try and get as much assets under management, charge exorbitant fees, anything from 0.75% to 2% plus a year to manage someone's money, get that money, get those fees, regardless of how well they perform, and also make a huge amount of money in the background. It could be from selling different insurance products. It could also be putting their clients' money into mutual funds where the mutual fund provider gives them a huge kickback. What other industry exists like that? I can't think of anything. High paid footballers, for example, if they perform really, really badly, well, they won't be high paid very long. You'll be on the bench. But if you're a financial advisor, stock market dips 20%. Don't worry, you'll still get your 2%. And what value are you adding? Don't worry, you can just call your client up and say, look, we've had a bad year this year, but you've got to have long term, right? Stick with me for 5 or 10 more years and I'll end up with more money than you will. It's absolutely insane. And it's probably the fault of some of the regulators about having it's so regulated that they only touch people with loads and loads of money. And I'm sure there are people with very, very complex tax situations who are in multiple countries who can get value out of it. But I think it's an absolute scam, to be honest. Way worse in the US. Way worse in the US. But anyway, God, really grinds my gears. Oh, you'll like this next one. This is one of the weirdest things in investing, right? So ETFs, I think, are probably a double-edged sword. They're one of the best creations to kind of come out of the investing world to make it really easy to invest into, the stock market. But I'm talking about kind of basic low-cost ETFs, like that cover the S&P 500 or cover the world. Unfortunately, the investing world has taken ETFs and been like, right, what else can we cover with ETFs? And pretty much every sector, every segment of the entire market, there are tens and thousands of these ETFs. And their goal is to just extract fees and as much money as they can from you and convince you that somehow you're going to beat the market. You have ETFs from every single kind of sector, whether it's AI, whether it's pharmaceuticals, whether it's, some sort of high growth, disruptive tech, whatever it is. The more complicated the words, the higher the fees, basically. And most of these ETFs have been around for, a few weeks, let alone a couple of years. And some of them have had a really good year. So investors, unfortunately, will go onto these, look at their past performance, go, wow, if I could get 25, 30% a year every year for the next 20 years, I'll be very, very rich. And you would be. You'd probably be one of the very best investors in the whole world. But it's not going to happen. These ETFs are crazy. Even some that cover luxury goods sectors or whatever. Brand new ones which are just created to take fees, mainly from newer investors who have no idea what they're doing, chasing performance. And unfortunately, you won't know how you do unless you stick with it for 5 or 10 years or more. But most people won't. They'll just jump from different ETF strategy to another, making it really, really crazy. It is such a massive grift, that industry. Again, I do think it's something that happens way more in the US than it does in the UK. If you just keep an eye on some of the things which are made popular on different social media sites. But it's insane. It just makes absolutely no sense whatsoever. Just keep an eye on things. Keep your costs low. Why are you going after high-cost ETFs and trying to chase performance, which is not guaranteed? Nobody knows what's going to happen in the future. Nobody knows. Oh, my God. Just think about this, a passive index fund. Some of them in the US as well. They're even way cheaper than they are in the UK. Some of them are free, right, to cover the S&P 500 or the globe, like 0.03%. So think about anything which is like 0.3 or 0.6%. That's like 10 or 20 times more expensive for a future that's unknown. You're just paying more fees and they're just extracting more fees by just calling these crazy, weird names. God. The next one, again, is probably more US based. And I really hope we don't get this trend here in the UK. But this idea of these covered called income generating ETFs. Again, I won't mention any particular names or brands, but the idea is that as an investor, you can sell these things called covered calls, which are not allowed to be traded actually in the UK. We can do kind of a similar thing, but put that to the side for 1 second. The idea is that in a flat market, if things don't really do much with a certain stock, you can still make money as an investor because you can sell your shares or you can lend them out to other people, traders effectively, and you'll get what's called a premium. Now you get paid that premium kind of no matter what happens later. But if that person buying those options from you eventually sells their shares, or because the share price, I should say, suddenly jumps up and they will want to exercise that contract, you will have to end up selling those shares and you'll miss out on those stock market moves with certain stocks. Basically, yeah, great, it works out in a sideways market, but the majority of time, you'll be much better off just holding the stock. It's crazy. Trying to jump in and out all the time. Anyway, the biggest issue with these is a lot of them are just targeted to people trying to give them, this idea of passive income. And they'll advertise what's called like a distribution yield, which sounds like a dividend yield, but it's not really the same. And they'll advertise massive yields like 60% a year. So you're thinking, hang on, if I just put in $100,000, £100,000, you're telling me I can get £60,000 back? Well, you might, but that's not your total return, right? The stock itself or the ETF itself has gone down massively in value, but it's paid out what's called a distribution yield, which if you look in the fine print, is basically your money returned to you. There's no guarantees. They don't have to pay anything out. That's just all past performance for the last 12 months. It's not free money. And it's just a real shame, but I just feel sorry for people who are getting caught into this. And again, it's sad to say that it's mainly beginner investors, noobs who don't really know what they're doing, and mainly people based in the US. Thankfully, I'm not aware of any covered call ETFs that we can buy in the UK, but I'm sure UK investors are finding ways to be able to buy them. They would all be outside of ISA accounts, but it's just mad. You would be better off just holding the stock than playing these crazy covered call things. I don't get it. The next one's pensions in the UK, right? I think this is such a mess and such a minefield. Actually, Damien did a good video on this one recently, just kind of going through the most important thing you need to do this year. And I would totally agree with him. The pension provider, industry just makes no sense at all. So, your employer will have a pension agreement with a certain provider, and you don't really have much choice there. You put your money in every single month and you're going to go with this provider. I mean, could you tell me, how much money you're paying up front to go into this provider? How much you're paying in fees? Do you really know? Do you know what fund you're in? Most people are in the default fund. Well, what is a default fund? It's whatever the pension provider wants it to be, a middle of the road, mixed global stocks and bonds. But also, you need to look at the fees. I randomly went on one of these big pension provider websites and got their fee structure. And over the course of your investing career, I won't go into too many details of how much it said you would pay in, but basically, you might end up with a 200k pot before all their fees and charges. After their fees and charges, you end up with 160k. So in your investing career, you've paid £40,000 in fees and charges. Why? Because it's all just hidden fees and charges that you've got no idea what exist. Money getting charged every time you put money into your pension, money maybe getting charged every time you pull out. And if you just look through some of the funds, which are all just named all gobbledygook nonsense, the amount of money you're being charged is just crazy. And no wonder people have no idea what they're doing. And because you get a letter through the post in your pension statement, and it's just crazy because it makes no sense. So, I mean, there is a solution to this one. Try and educate yourself, and I'll try and spread the word as best I can on pensions, and try and find the lowest cost option you've got and can do. But also maybe if you work for a company that you can potentially change them as well, because I think they're just taking people for a ride. Thousands of pounds, tens of thousands of pounds, just ripping people off because people have no idea what they're doing. Doesn't mean you shouldn't invest in a pension, you absolutely should. But I think it's absolutely, it feels like such a grifty industry, like vampires just sucking all the fees out for doing absolutely nothing. It just really grinds my gears. A bit of a theme, that, isn't it? And on that one, on the next point, this is just generally for the entire industry. I just said fees and charges being so complicated. I mean, when I do my kind of best ISA or best investing app video, it's so complicated to do because it's like, well, if you invest monthly, the costs are going to be this. If you trade more than once, the costs are going to be this. If you buy US stocks, the costs are going to be this. There's an FX fee there. There's a platform fee there. There's an ETF fee there. Oh, that's a mutual fund, not an ETF. Okay, that's a different kind of fee. Oh, but it's limited up to this amount. Oh, and it's a percentage based. No, this one's a fixed one. This one's monthly. This one's yearly. Like, I could go on. How is the average person meant to decipher what the hell they're doing, right? And we have to say to people, oh, well, we just find one what's right for you. Well, how do you know what's right for you? How do you know that you're going to be making more than one trade a month, or whether you're going to buy an ETF or a mutual fund from this provider or that provider? It's total, utter mess. And the worst thing is these fees are they're just all over the place. It doesn't make sense. I wish it was just clearer. I wish it was, you could almost type in and say, I'm going to do this. How much are my fees going to be? And also, almost like, your gas and electric bill. And I think there's legislation that on the bill, it has to say, oh, by the way, there is a cheaper tariff. I would like to see that in the financial industry saying, you could do this, but also a big box next to it saying, by the way, if you did it like this, it would save you loads of money. But that's not their incentive to do that, unfortunately. Again, I don't really blame these companies. Their idea is to generate money. Everything costs money as well. Nothing could be absolutely free. But isn't that just mad? It's absolutely crazy. You need a PhD to understand all these fees and charges. Hey, look, I'll do my best and try and educate people, but what a mess. Almost swore there. This next one probably goes back to a lot of things I've been talking about, but the jargon. I think the worst thing about this industry is all the jargon, and especially in like fund names. I made one up here. It's in front of me. Again, this could be pensions, or you're searching on your broker. You're like, well, what fund do I invest in? And you're like, here's one, the Global Growth MSCI Strategy Index, 85% Class C AC. What does that mean? And at that point, it's like, well, I personally could help kind of break things down and try and make things simpler for people. But how the hell is the average person meant to know what that means? And then I think at that point, then that leads people to either do two things. They either say, investing too complicated, I can't do this, where do I even begin? Or, oh, I'll just go and pay someone else to do it for me. Or at that point, yeah, I need a financial advisor. So here we go, take all my money. I've got no ideas on fees. So how are you meant to even decide what a good financial advisor would be? Or how am I even meant to know what good value is? There's no benchmark of what good value might even be. And again, because we don't know the future performance, you don't know if it's worth paying this extra % for this crazy fund name fee. But I don't know. General rule might be the longer the fund name, probably more you should avoid it, really. But isn't it crazy? There's so much jargon. And I know I'm probably guilty as well of also using some of the jargon, and I forget to break things down. But I have to try and balance that, keeping things as simple as possible. But then also some people who are a bit more advanced will get annoyed at me in the comment section, like, you're covering all the basics again. I'm like, well, what do you want me to do? Anyway, right, we're on number 9. We're near the end. If you've made it this far, take a deep breath. Hope you're not got too angry. Hope you're enjoying it. I mean, I am getting a bit off my chest of the investing world. A little bit less scripted on this video, just to kind of let the steam all rise. On this one, I've put just going all in on one stock. This probably goes back to the first point of these financial influencers. The idea that you have to go all in, that high risk is high reward, and that's the only way to make money in investing is just wrong. It's just terrible, terrible advice. It's absolutely BS. It's complete bonkers. And unfortunately, these channels or these individuals will convince you what they're doing is right, because you just create this incredible echo chamber of confirmation bias of, yeah, you know what, this company's really good. I'm doing the right thing, going all in. Yeah, I spent every single paycheck. Yeah, it's got to go into this company, got to go into this company. But at the end of the day, firstly, two things are happening here. The stock price is not the company. You can have the world's best company, the world's best product. The stock price does not have to reflect that in the short term or even the long term. If everyone knows about all of the stuff you're talking about, that is public domain information. And if you're just spouting stuff that is public knowledge and everyone knows about it, that is not research. That is not an edge. Everyone knows that information. Yes, the market can be very irrational sometimes, and also be irrational on the upside and the downside. I hate the fact that people suggest that you have to risk everything while you're young, risk everything on a single stock. You absolutely don't have to do that at all. Speculate if you want with a very small part of your portfolio, but that's insanity. Very, very few companies, of all the tens and thousands of companies that have ever existed on the public markets, most don't exist now. Most will not exist. The top 10 companies in the S&P 500 probably will look very different in the next 20, 30 years. The next big company will be tiny right now. Who knows? But also, just saying you're going to 10x bro by putting all your money into one stock, I hate that with an absolute passion. I can't tell you how much I hate it. And again, yet again, guess who these are targeted at? They're targeted at typically young guys, you know, people who are starting off their investment journey, and they want to make money quickly, because no one wants to make money slowly with boring index funds. I get it. I get it. Everyone wants to make money quickly. And you also might have a good year. Oh, look at me. I made 40% last year, 50% last year with my individual stocks. Great. Can't do that over 20 years. You're doing very well. I mean, you look at the likes of Warren Buffett's record, and it's like, what, 20% compounded for 40 years or whatever or more. That's incredible. You're not going to if you can make 50% a year compounded, you'll be the richest man alive. It's not going to happen. Anyway. And finally, I always enjoy this one, and you can call me guilty of this one if you want sometimes, if you find me doing the same. I said, look, misquoting the greats, misquoting Buffett, Munger, Lynch, or anyone, basically to suit your views, because you can, get hold of a video clip or get hold of an article and very much twist their words and say, I know what I'm doing because Warren Buffett said I should do it. Some of the most famous ones are stuff like, it's always around diversification. It's like saying, well, Buffett and Munger would call it diversification. They would say you shouldn't diversify because only people who don't know what they're doing diversify. Only idiots would buy broad market index funds. If you know what you're doing, because obviously you're a god, you're an investing genius, then you would buy less stocks. You would go all in, because that makes sense, right? You know the future. You know the stock has to go up because you've done your research. Remember, you've done your research on all the publicly available information, the publicly available calls, the publicly available financial statements, and you, with your wisdom and YouTube, have realized that stock must 10x. It's shameful. It's crazy. Think about it like that. And obviously, because you don't know what you don't know your blind spot. So yeah, of course. But the worst thing is that in the same clips, and I can picture this one, especially what Warren Buffett's in, he's in a lecture hall and he's talking about diversification. And his conclusion is actually, because most of us don't know what we're doing, and that's a good thing to admit, that is when you diversify. The best investment strategy would be one stock. If you knew the future and you knew that one stock would go up, there will be the best winner from now until the next 20 years. There will be a best winner. How many people will find that? I've got no idea. How much of that would just be pure speculation? How much would that would be, an educated guess? Who knows? It's anyone's guess. And then another one who gets quoted all the time is the great investor Peter Lynch. It's always about, you've got to know what you're invested in. And that's how you get your edge. So you're like, right, yeah, well, I really know this stock. Again, with all this publicly available information, I really know this stock. I know Tesco. I go shopping there every week, so I really understand that business, how to sell groceries. So therefore, I should put all my money in it, right? That's how it works. I mean, it's crazy. And also, but the funny thing about this as well, when you actually investigate Peter Lynch as well, which is a bit of a funny one, because his fund, when he retired, ended up with thousands of stocks in it. I mean, how you even keep track of that many stocks, I've got no idea. I mean, I've only got a handful outside of all my index funds, and that is a struggle in itself, trying to keep track of it. So anyway, it's crazy. Anyway, I feel a bit better now. I don't know about you. If you want me to do this video again, let me know, because I could definitely do 20, 30, 40, or even 50 things that annoy me about the investing world. And hopefully I can fight on the good side moving forward. And if I am guilty of any of these, feel free to call me out in other videos, definitely. Anyway, I'll see you in the next video. Happy investing.